I'm Catherine Ross. I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's top of mind for you?
Marriott. The stock opened at 103 and then rallied to 112. Marriott's been a straight line down since 140. That indicates either there's a short squeeze or maybe there's hope. Why do I fixate on Marriott? Because this is going to be, if there is a recession, a travel and leisure recession, and the largest hotelier would certainly give you a signal with its stock of any hope at all. Remember what Warren Buffett says, which is that you don't know when you've hit the bottom, but it's important to try to stay in, and that's what I've been obviously urging with action alerts.
With all this signage, you guys just celebrated, Mad Money just celebrated its 15th anniversary. Congrats.
Thank you.
What's one lesson that you've learned in the past 15 years?
The viewer is always right. Now, they may not be right about the market, but they're certainly right in terms of what they demand. And if they demand education, they're going to get it. And if they demand entertainment, they're going to get it. Nothing's beneath me other than anything that's illegal. I think it's very important to recognize that I have put out a commercial product, which is why has the longevity that it has. But it's still an educational product, which is why people keep coming back. And I'm very proud of our team, Regina Gilgan, Cliff Mason, and the rest of the great souls, 80% of whom are women. International Women's Day is on Sunday. Now, I do take aim right now at the people who are just solid indexers, because their method, which has always been so regaled, is proving to be a terrible method. They are doctrinaire and also fee hungry. I don't earn any fees, and I'm not doctrinaire, but I do think that, and I say that because I think that individual stocks should go alongside index funds. But most of the people who have propagated index funds think that our viewers are too stupid. And I use that word very precisely because I know the contempt with which a lot of the professionals feel about the people who watch our show, and I'll defend them tooth and nail.
We got the jobs report this morning. It came in very, very strong, but of course that February number did not have an impact of coronavirus. When will we start seeing these economic indicators matter again?
So there was more than 50,000 people that were hired in food and beverage restaurant. Rather extraordinary, because that's exactly ground zero of what could be other than airlines. I think that in cruises, it's irresponsible to continue to allow cruises. Those companies, I'd rather just give them a handout than keep sending people on cruises. There's a long record in CDC of issues involving communal diseases on ships. Now it's imperative. Wow, Walmart's up. Jeez, how do you factor that in? I'm trying to figure anything that's travel and leisure and shopping. That's where the points of pain are. I'm not looking for hope. I'm just saying that there are pockets of opportunity.
Let's move over to the ticker tape, because we're down about 484 points on the Dow as of 11:07 a.m. So let's go this way.
Give me all the easy ones. These are Dow Jones, not a problem. Goldman's now $10 through book value, tangible books, so that's a decent level to buy. Home Depot, we sold some in the 240s. They had an amazing quarter, down 8. I think that's an overreaction after what Costco said about a lot of the things they're selling. IBM, it's a yield play. ICE is one of my absolute favorites because it has nothing to do with the economy. J&J down $1.80. It's AAA balance sheet, fantastic. Now, JP Morgan's obviously in flux because of Jamie Dimon. We want him to come back. We don't know if he can. The stock is down a straight shot for 30 points. Coca-Cola down 55 is a must-buy because James Quizzy's doing so good. And McDonald's could be a communal place. Not sure. I think you should sell 3M. I still don't like the PFAS problems that they have. Merck is a buy down 72 because Keytruda is doing so well. I don't know why people still love Nike, because it's got Western Europe, it's got United States, it's got China's not so good. Pfizer, something I recommended earlier this week because of the yield. Procter's down all the way at 114. No reason to be able to jump on that now. Travelers is interesting because I like the insurers here on a deflationary environment. United Health, no, I don't want to touch it because I think that Bernie's not necessarily done. United Technologies numbers cut really badly. Visa, too, related to travel that I don't necessarily want to be in it. I like MasterCard more. You want to buy Verizon right here, given the fact that rates have come down. Walmart is just plain too high. Exxon, I do not want to touch because it's fossil fuels. No reason to be in it. American Express is finally coming down the way it should have because that is really travel and leisure. No, thank you. Boeing's got yield now, but I don't want to play because I am quite worried about what the outcome is. Caterpillar, no, come on. That is go to 116. You have to sell Chevron. Even though I like Mike Wirth, I'm waiting for the Disney theme parks to close before I would recommend them. That's going to be the give up. Dow, you don't buy chemical companies going into recession.
All right, Jim, as always, very impressive. Thank you so much for taking the time to join us today. Happy 15th anniversary,
very much.
and we'll see you guys on Monday. Now head on over to Action Alerts Plus, our daily rundown show, with us right after this. I'm Catherine Ross. See you Monday.